How's it going, gang? Well, we had a pretty busy week. I know a lot of you don't bother with the stock market or keep up with the news or what's going on. And I got a lot of friends like that, and they always like get a hold of me and like, hey, what's going on this week in the world? And I tell them the same thing. I kind of tell you guys. I keep up on all this stuff daily. I mean, I check bond yields, I check the stock markets and everything. Um, Let me get some things pulled up here. Um, we got some more issues with the private investment companies, kind of like like BlackRock and Blue Owl Capital and ones like that. Well, this other one, they just got downgraded by Moody's because the default rate to the company that they're not able to hide anymore is up to 6%, and this company is KKR Capital, and they've limited all their investor withdrawals to 45%. Now, I don't know if that's 45% of what they got in there or 45% of whatever their terms and condition is of how much you can withdraw at a time. Their stock is down 22%. And it's the thing, like there's the chart right there with how bad their stock's getting. But the thing is, I research these companies. I dig into them because I don't just want to know who they are. I want to know who owns them. And when I dug deeper into this company, come to find out BlackRock owns 5.5% of this company. And the thing with the defaults and the stock, because people can't pull their money out, so they're going to sell the stocks off. That's like I said, if you've got, let's say, $100,000, I'll just use a round number, invested with this company, and then you've got, $20,000 worth of their stock, and they won't let you have your money because they've halted withdrawals. Well, the only thing you can pull that they cannot stop you from taking is their stocks. But the thing is with their default rate, and this was reported as of a month ago, was what Moody's downgraded them just this week, but the information they got from the data was from a month ago. BlackRock owning 5.5% of this company, and this company's default rate is already at 6%. It was like five. It was just shy of 6%, but that is going to further, make problems for BlackRock, because when you invest money in these companies, or your 401ks, that's a good example. 401k money, pensions are kind of a thing of the past, but your 401ks is invested with these companies, and these companies invest your money. So I wouldn't be surprised. There's a lot of 401k money that could be your guys' money invested in this company, and the rate this company's going, it's going to be another Lehman Brothers and Bear Stearns. I mean, all these companies are halting withdrawals. and the thing is, sorry about that people are broke. I mean, inflation's been going back up, gas has been going up, we all know why. And now we got a helium problem, because I didn't know that. I thought that that the U.S. produced plenty of helium, but most of the helium, or 50% of it, comes from over in Qatar. But and that plant got blown up. So according to what I was reading, it's going to take them at least 5 years minimum to get that plant back up and running. And helium's used in stuff like chip manufacturing, like Intel and all them companies. Excuse me, sorry, I had hot wings again. I know I need to quit eating that stuff, but it tastes so good going down. But it's this liquidity. This is bank runs. This is what you would consider a bank run, but it's through the private equity companies. People liquidating everything they can get, and I just, next week's going to be even worse, more than likely, because like I told everybody before, this week was going to be bad, and it was bad. Then this was from Realtor.com. Now this was seven. Excuse me. Sorry about that. I need to get some coffee. This too makes me get acid reflux real bad. Realtor.com. Foreclosure filings rose 20% year over year in February. So we're already, we're getting data from February, making it the 12th straight month of annual increases of foreclosure filings, with 38,840 properties nationwide receiving filings just in the month of February, according to ATTOM data. Indiana was the worst rate in the country, at one in every 1,597 home housing units, twice the national average in every 3,701 units, followed by South Carolina, then Florida. Now they got a map here from Realtor.com showing which states they are. But you've got Florida, South Carolina, Ohio, Indiana, Illinois, Texas, Arizona, and Utah. And then you have New Jersey and Delaware. They're so small, I gotta zoom in on them. But, there's, excuse me, there are some YouTubers or even realtors that, say that this is crap, that this is not true because the data's not showing it. The thing with data, it always lags behind what's really going on. Like when I was telling you guys in Florida, and you guys seen how dead it was, like there was probably just as many for sale by owner signs I seen there in Bradenton, more so Bradenton than Sarasota, because we really didn't go around Sarasota a lot. I mean, granted, they're butt up together, but, where Mom's at around Bradenton, I don't think it's the people are losing the house because, sorry about that, they're not in foreclosure, but because they didn't have the money to fix up their house, because they didn't have homeowners insurance, because that whole side was in a false sense of security and never having a hurricane for what was the last one hit Tampa, like a nasty one in like 1930 or 1925. So there's a lot of people that didn't have homeowners insurance, and they're selling them for sale by owner as is. I stress this, that if you're looking to buy something and you're wanting to buy down there, I mean, there's like neighborhoods that you might think look cruddy. They're really not cruddy. It's just the houses got tore up, and I mean, they're working class people. They're trying to sell the house for what they can get out of it. But I mean, that's what I was telling you guys, is all this data, it all lags behind. So these people say, well, like someone telling me that I'm making this up. Well, no, because you want to go off data that doesn't show up for 1 or 2 months, when I'm already showing you what's going on right now. And I was showing you guys what was going on, and now that stuff's finally coming in. There's a friend of mine on Facebook, and she's looking to buy, and I told her, and she follows me. Thanks for watching. Yeah, hey, hi Jamie. But I think she said she was looking into Port Charlotte, which is in Charlotte County, Florida. There you got Punta Gorda, Port Charlotte, Northport, all that crap there. But I think she was, if I read her message right on, she texted me, that she looked on the county auditor, and there's a ton of foreclosures down there, and they're piling up. Because I'm not sorry about me clearing my throat a lot, but that's, like I said, them hot wings, they were hot. But that's all going to get brought forward. Like when 2008 happened, I went to the sheriff auction religiously every single Friday, every week. I think it was Friday when they had it on. And, the sheriff would be standing there at the bottom of the steps inside the courthouse, and he'd have, he had his secretary over here, and he'd have a stack of folders. I take it back, she was over here because she handed him a folder every time he'd auction it off. But it started out small, kind of like what it is now, and it kept piling up and piling up and piling up. And that one week, I mean, he had a stack of folders this big. I mean, it was, almost, it was decent size. And there was 37 properties that he auctioned off that day. And he's like, we've only got 18,000 properties in this county. And at the rate we're auctioning off houses, we're eventually going to run out of property to sell. I mean, because the people that can afford it don't have to worry about it. Like, they say the rich will be fine no matter what. Well, that'd be the case if you got your house. But this stuff just kept piling up and piling up. And I remember there was a couple that, now this was in 2000, I think we're about 2010, I'm guessing. I'm going to say right about there. There was a couple that worked at one of the local factories around here, and they ended up acquiring 26 houses that they bought the sheriff auction. And they took a loan against their house because they were in their early 50s. I think they were in their early 50s about that time. Their house was paid off, so they took a loan out against their house, like I think a line of credit or cash out refi, whatever the hell they did back then. And they took out loans against their retirement, and they were buying up all these houses. And he looks at me and he goes, BJ, he goes, man, I don't know what I'm going to do with all this. I said, you're a full-time landlord now. You're going to quit your job. I said, you have 26 houses. I said, you guys are set. You guys get all, and he was doing the work. And somebody's yelling, hold on a second. Kids going down the road. I thought they were yelling at me or something. But, like, he's like, I never thought about that. I'm like, yeah. I said, you guys have no need to work anymore. Just quit your job. I said, take out what you have left in your 401k, set it aside. I said, there you go. But and they were picking these houses up. Now, these were probably, oh gosh, I'm going to say they were all at least, there was a few 2 bedrooms they picked up, 3 bedrooms. Some houses were ranches. It just depended on who lost the house. And, you take, back then I think rent was about, because rent went up. They claimed that rent went down. It didn't. This area, it went up. Rent went up because people have to have some place to live, and a supply and demand. So you take $750 a month. That was the price of rent back then for a 3-bedroom, and that was rent, water, and trash, and multiply that by 26. That was their monthly income. But you're going to get, like if you're wanting to buy something in Florida, get back to what I've got off topic, I'm sorry, squirrel. There's going to be a lot of better deals in Florida. Just keep waiting it out because it's getting worse and worse and worse. Stuff is not selling. And people are being forced to either lower prices, a lot are going into short sale, and short sale is where you found a buyer for your house, or you're to the point where you're going to go into foreclosure. You're at that point. You're going to go into default. So you find a buyer for your house, and the buyer will make an offer to the bank, which is less than what you owe, and the bank has to determine whether they're going to accept it or not. And that's how you get out of your mortgage. It's better than file bankruptcy. The foreclosures, of course, that was the Dodd-Frank Act, or where they passed back in 2009. A lot of that changed the foreclosure process, but it's a little bit slower. But all that stuff's going to keep piling up. As it piles up, it pulls down the rest of the properties in that area, because whatever the last house sold for in that neighborhood, that's what those houses are worth. I don't care if you got, unless, apples to oranges, it still kind of pulls it in the area. Now, mind you, if there was all 2 bedrooms and you got a 4 or 5 bedroom, yours is going to be worth more. But just keep waiting this thing out. Let's see, here was another investment company, Apollo. That's another big one. They've limited their investors. This was from CNBC. Apollo gives investors only 45% of requested withdrawal funds. People's getting pissed off because they can't get their money out. These are private companies, and at the time when they were doing this, they were making good money on it. And now that these companies go belly up, they've lost their money. Another one, This is from CNBC. January, new home sales plunge 17.6% from CNBC. It's, and like the last video that I was telling you guys, or a couple back, these home builders are having to cut the prices of their houses, making it sound like that they're selling. Well, they're not selling. They're telling on themselves. If you're not selling something, you're going to lower the price of it. They've already dropped their prices 24%, almost 25% from peak to where it is now, and it's still plunging. They're just going to keep dropping them. But the thing they got to be careful with these builders is, in like a big tract housing area, like a subdivision, and they sold a bunch of houses at, let's say, $300,000. We'll just use that number. And, they're already cutting their price. If they get too low, then there's a possibility where the ones that already bought can file a class action suit, against the company because they've cut the prices so much. There was something I was reading about it, and I heard something about it on YouTube. I was trying to catch all the fine print of it, but there's something behind that where they can get it. They got to watch what they do with that. The Dow Jones, all the markets were down. Crypto's down. The Dow Jones in the last month is down 7.64%. It doesn't seem like a lot, but most of that came within the last 2 weeks. Like I was saying, somebody will go, oh, the market's down 800 points, and then, oh, tomorrow it's up 500. No, you're still down 300. You're not up, you're still down. S&P 500 down 7.5%. NASDAQ down 8%. Russell Index down 8%. And then you got these bond yields, the Treasury bonds, which the 10-year Treasury bond is what controls the 30-year mortgage rate. They're all going up because people's pulling their cash out of, investment companies or selling stuff off, and they're buying bonds because the government has to compete with the banks. Just like, and I think it was about 2007. It was I'm going to say probably about fall of 2007. You had a lot of banks that were like, they were paying 7.5% for 5-year CDs. They were buying money. They were buying liquidity to build their stash up. They knew what was going on. People were defaulting on credit cards, defaulting on car loans, and those two right there, those go into banks. Your mortgages are kind of protected by Fannie Mae and Freddie Mac to a point. It depends on what kind of mortgage you got, but the mortgages back then were a little bit different than what they are now. Like, they say, oh, well, we don't have all that shady stuff going on now. Yeah, we do. I don't care what you call it. I hear these commercials all the time. Take equity out of your house, pay off your high debt credit card, and be debt free. You're not debt free. You're just literally moving the debt from here to here. And 95% of the people that pay off their credit card, they'll go take a loan on their house for, $10,000 or whatever the hell they owe on their credit card, pay their card off, cool. But then they go and run it back up again. So now you've got the payment that you've, added to your house on top of your property taxes and your property insurance. Now you're paying your credit card again. You're not doing anything. You're just making yourself further in debt. You cannot borrow your way out of debt. There's no way to do it. You can't do that. But what I'm saying is, like the private equity companies, funds, I don't know what they're paying. If their default rate is getting that bad, and if they need liquidity, I think one I was reading said that they was paying 9% on what you invested with them. But if their default rate's that bad, they're really going to have to incentivize and entice you to invest in their company at a good rate. But at the same time, they have to be able to make a profit, because if they're paying you 9% interest on, $50,000, they got to be able to at least make, cover 15% or something different. I mean, kind of like your credit card companies. I'm surprised a lot of those don't have backing, but I'm not really familiar with how all that credit card stuff works, because I asked my credit union. I said, like, is there a limit on how much the credit union can have that issues cards to various people? And she was telling me that there is, but it's not. I never really got into credit cards a lot, because I'm not one for credit card. I mean, I'm not one to get into credit cards per se. I got a credit card. I mean, I got several credit cards. I mean, heck, I even put in for a Lowe's credit card just for, like, shits and giggles, just to have one, just out of curiosity. And I gave them all my information, and hell, they gave me a $10,000 credit limit. I mean, cool. I've never used it. I've used it here and there if I want to buy something and get a 5%, you get 5% off. But other than that, I don't know. I use a card versus cash. I rarely write checks. I still got checks. I mean, I'm gonna say probably like a box of checks you get, or the little folder kind, however they send them to you. They'll last me for years. But I run everything through my credit card. That way I've got record of what I got. Then I get my cash rewards, and I just throw it back in my money market. Crypto, like I said, it's the weekend, so the stock markets are closed. So anything that happens over the weekend, your crypto is going to take the brunt of it, because that's the only thing to be cashed out. Like, you can cash it, then you can send it, wire or send it back to your bank account. But everything else is going to have to wait till Monday morning. I got a feeling next week's going to be even worse. And the thing with you, like I've told you people, like, be careful with your 401k money. I don't want to see you guys have, $200,000-$300,000 that you've built up over a amount of time, and when all the stock markets really go down in these private equity companies, you might only have $100,000 left, maybe $75,000, and then that money's gone. You'll never get that money back, because 401k money is not backed, is not government backed. It's not like you put your money into a CD or money market where they can't touch it. It's limited. Just be careful with that, guys, because like I said, I don't want to see you guys lose money. A lot of people did. Excuse me. But other than that, I'm going to keep my eyes on what's going on this weekend. But just like I said, I do most of my search. I hit the Google button on your search. I hit Google and read, but I've selected stuff I like to see. These high fuel prices, it's at the pump now. Next, it's going to be hitting your fertilizers for the farmers. It's going to be hitting your food, because it's got got to be delivered. Your fuel surcharges are going to go up. Everything's going to go up, and they go, oh well, people spending more money, well, but they're buying the same amount or less crap. It just stuff costs more. And the Federal Reserve, now this is what gets me. People, like naive people that believe the media and, all this hype about, buy the house because look at how much you would have saved if you would have bought it now versus, wait. You could have bought it back then, but now it's even higher. Okay, well, and a lot of them did, arm loans or whatever. I know the couple that bought the house off my girlfriend, a young couple. They did, I think they did an arm loan or something like that. I think she worked for one of the bank that did it, and they're going to lose that house. It's because they were young. They should always get a fixed rate. Always get a fixed rate. And the thing is, if you can't afford a down payment after, do the fixed rate down payment, you can't afford a house, because houses have maintenance. But a lot of these people that got in these variable loans, like from, for instance, like from these home builders, they were getting like a cheap rate for the first, bought their rate down for like a first few years, and it's going to go up, and it's not going to go down. You were told to marry the house and date the rate. The rates have been going up. They're at 6.5 now, and they're going to keep climbing because inflation's coming in. And as they keep printing more money, they're going to have to kick rates up even higher. I won't be surprised if we see mortgage rates at 7.5% minimum by the end of this year. I won't be surprised. And if they keep printing all this money for bailouts, you're going to see mortgage rates about 9%. There's no other way they can do it. They either got to let the economy crash or save the dollar. The government is going to save the dollar because the dollar is the government. They will let everything else tank and they'll get rates kicked way up. Now, if you're like me and you got a lot of liquidity, you put that in money markets and CDs and you're going to make a nice little chunk of money. I remember my aunt telling me, she helped raise me, and this was back, I think she bought these, this would have been when Reagan was president back in the 80s. She was locking in money in CDs at 18% interest rate. 18% interest rate. That's like every 5 years your money almost doubles. You're close to it. Now my grandma, my paternal grandma, my dad's mom, she was locking them in at 15%. I remember her telling me. I mean, I would love to see that. Because I'd probably sell everything I got and just go ahead and throw it all into money markets and CDs. But anyway, I rambled off enough, guys. We're almost to 27 minutes. I try not to keep you guys because I don't like long videos myself. But everybody have a good weekend. Leave me your feedback. What have you guys seen in your area? Are you one that bought into the hype, and married the house and you're dating the rate, and now it's going to bite you. It's going to bite a lot of people. There's going to be a lot of foreclosures because these rates keep going up. But anyway, hope you guys liked my video. Like it if you would, please. Subscribe to my page. Share my video. That's the best thanks you guys can give me. And I'll see you guys next time.